Income tax. It's important that you understand that gross income is the total income before tax has been taken away. What the standard rate cut-off point is, standard rate of tax, higher rate of tax, gross tax, tax credits, net tax, income net of tax. And when all deductions have been made, we're left with take-home pay, which is also called net income or net pay. You also need to understand about PRSI deductions and USC deductions. So gross pay or gross income is money earned before deductions are made. Net pay or net income is money received after all deductions have been made. So here we have a summary of all the definitions. Calculating income tax and net income. Derek has a gross annual income of €50,000. His standard rate cut-off point is €32,000. The standard rate of tax is 20%, the higher rate of tax is 40%, his tax credit is €3,500. Derek is in class A1 for PRSI. Assuming a 52-week year, calculate Derek's gross tax, part 1. So gross tax is his standard tax plus his higher tax. To work out his standard tax, take the standard rate cut-off point and multiply it by the standard rate. So that's €32,000 multiplied by 0.20, which is 20%. That gives us €6,400. To work out his higher tax, it's going to be the income above the standard cut-off point multiplied by the higher rate. The income above the standard cut-off point will be €50,000, which was his gross income, minus the 32,000, which is the standard cut-off point, leaving us with €18,000 balance. So we get 40% of €18,000, and that's 7,200. Adding both of these, we get his gross tax. So we're left with 13,600 for his gross tax. Part 2, calculate Derek's tax payable. Tax payable is the gross tax that we got in part 1 minus the tax credit. The gross tax from part 1 was 13,600. The tax credit is 3,500. We got that up here, leaving us with €10,100. Therefore, his tax payable is €10,100. Part 3, calculate his net income, ignoring PRSI. Net income is gross income minus tax payable. His gross income is €50,000. We got that from the question. His tax payable is €10,100. We got that from part 2. That leaves us with €39,900. Therefore, Derek's net income is €39,900. This, remember, is before the PRSI deduction. Part 4, calculate Derek's PRSI payment. So Derek is in class A1 for PRSI. And Derek is the employee, not the employer. So Derek pays 0% on the first €127 and 4% on the balance. The rate for the first €127 per week is 0% for the employee. Therefore, the amount at 0% for a year is 127 times 52, because there's 52 weeks in a year, which is 6,604. His PRSI is calculated based on €50,000, which is his gross income, minus the 6,604, which we got from here, which leaves us with €43,396. So this is the balance. So we get 4% of this. So €43,396 has a rate of 4%. So 43,396 times 0.04 is €1,735.84. Therefore, the PRSI payment is €1,735.84. Part 5, calculate Derek's net income after PRSI has been paid. So his net income minus his PRSI will give us his net income after PRSI has been paid. His net income was 39,900. This is from part 3. Subtract the 1,735.84, leaves us with €38,164.16. So this is his net income after all deductions. Orla earns €64,000 in a certain year. The standard rate cut-off point is €35,400 and her tax credits are €3,240. The standard rate of tax is 20% and the higher rate is 41%. Part 1. Find the gross tax that Orla has to pay for the year. We can lay out the calculation in a number of stages. The first calculation is to find out how much of her income is taxed at a higher rate. We get this by subtracting 35,400 from 64,000. So her gross income is 64,000 euro. We got that in the question. The standard rate is 20% of 35,400. So 20% of 35,400, that's 7,000 euro and 80. The higher rate is going to be 41% of 28,600 euro. So we got this from subtracting this from this. So we took the standard rate cutoff point away from her gross income, and that left us with 28,600. So we get 41% of this, and we're left with 11,726 euro. We add these for her gross tax, giving us 18,806 euro. Part 2, find her income net of tax for that year. So her gross tax is 18,806 euro. This is from part 1. Her tax credits are 3,240. We got that from the question. And her net tax is 15,566. So we got this from subtracting her tax credits from her gross tax. So her gross income is 64,000 euro. Again, we got that from the question. We subtract the net tax, which we got here, and that leaves us with her income net of tax, which is 48,434 euro. So Orla's income net of tax for the year is 48,434 euro. So this is also called her net pay or her net income. Part 3, what is her monthly income net of tax? So we know that Orla's income net of tax for the year is 48,434 euro. We got that from part 2. So her monthly income net of tax will be 48,434 divided by 12 months in a year, which is 4,036 euro and 17 cents. Peter earns 5,200 euro in a certain month and has an income net of tax of 3,967 euro and 50 cents for the month. The standard rate cutoff point for the month is 2,950 euro. The standard and higher rates of tax are 20% and 41% respectively. Part 1, find Peter's gross tax for the month. We are not given the tax credits, so we have to work forward as far as we can. Then we can work backwards to calculate the tax credits. So his gross income is 5,200 euro. That's given in the question. The standard rate of tax is going to be 20% of 2,950 euro. Again, they were both given in the question. That's 590 euro. The higher rate of tax is going to be 41% on the balance between the standard rate cutoff point and his earnings. So his gross income is 5,200. That was given in the question. His standard rate cutoff point is 2,950. That was given in the question. We subtract to get the balance, 2,250 euro. So you get 41% of 2,250 euro. That's 922 euro and 50 cents. And then we add these two together to get his gross tax, which is 1,512 euro and 50 cents. Part 2. Find Peter's net tax for the month and deduce his tax credits for the month. So his gross income is 5,200 euro. That was given in the question. His income net of tax is 3,967 euro and 50 cents. That was given in the question. We subtract these to get his net tax, which is 1,232 euro and 50 cents. The difference between the gross tax and the net tax are his tax credits. His gross tax is 1,512 euro and 50 cents. This was from part 1. His net tax is 1,232 euro and 50 cents. We got that from up here. Subtracting these, we get his tax credits to be 280 euro. Thus, Peter's tax credit for the month is 280 euro. Emily earns 46,500 euro in a year. For that year, the standard rate cutoff point is 30,250 euro. The standard and higher rates of tax are 21% and 42% respectively. Her tax credits for the year are 2,950. She pays PRSI at 4% on all income over 6,604 euro. She also pays USC, Universal Social Charge, at the rate of 2% on the first 10,036 euro of income, 4% on the next 5,980 euro, and at the rate of 7% on all other income, anything over that. Part 1. Calculate how much Emily pays in income tax, PRSI and USC. So let's start with income tax. Her gross income is €46,500, given in the question. Her standard rate is going to be 21% of €30,250, again, given in the question. This is €6,352.50. Her higher rate of tax is 42% on the balance. So we take her gross income, 46,500, we subtract the standard rate cut-off point, 32,250, and we're left with €16,250. So we get 42% of €16,250, and that's €6,825. We add these to get her gross tax, which is €13,177.50. Her tax credits are €2,950, as given in the question. We subtract the tax credits to get her net tax, which is €10,227.50. Next, we're going to work out her PRSI. So we have to get 4% of 46,500 minus €6,604. So subtracting these, we end up with €39,896. We get 4% of this, and it's €1,595.84. So this is her PRSI payment. So we got each of these from the question. Next, we're going to work out her USC. So the low rate of USC is 2% on the first €10,036. We got that from the question. And 2% of this is €200.72. The middle rate of USC is 4% on the next €5,980. Again, we got that in the question. And 4% of this is €239.20. She then pays 7% on all the rest. So the higher rate is 7%. So we need to work out the balance. So she earns €46,500. We got that in the question. We subtract the €10,036 and we subtract the €5,980, and we're left with €30,484. So this is the balance. So she pays 7% on this. So 7% of this is €2,113.88. We add the three of these together to get her total USC, which is €2,573.80. Part 2. Determine her monthly take-home pay. This is her net income or her net pay. So let's work out her total deductions. Her tax was €10,227.50. Her PRSI was €1,595.84, and her USC was €2,573.80. We got all of these in part 2. Adding them together, we get €14,397.14. So her gross income is €46,500, it was given in the question. Her total deductions are €14,397.14. We got that from up here. We subtract these to get her net income, which is €32,102.86. Thus, Emily's monthly take-home pay, or her net income, is €32,102.86 divided by 12, because there's 12 months in a year, which leaves us with €2,675.24.